Hello, hopefully you're all fine and well. This is Adrian Buthee speaking, the head of trading here at Trendsignal, and we're going to be talking about the opportunities that are setting up today. So, the whole purpose of this Trendsignal live session is to take you through a little bit about how we'd be using the system tonight, what sort of opportunities are setting up by the way they look now. Now, it could be a little bit different tonight. Some opportunities may not trigger tonight. New ones might come in depending on how the market's going to move over the next few hours. But certainly at this stage, this is sort of simulating what our members might be doing and looking at this evening. So want to make sure the sound's coming through loud and clear. Now, we are streaming on multiple different places today: YouTube, Facebook, etc., etc. It's going to be really hard to go through any questions with you there, but if you're on GoToWebinar, then you can use the GoToWebinar app and you can type any questions in there. So if you're on a smartphone or tablet, that sort of thing, you'll see the GoToWebinar sort of questions button there. Let's change that color, and then you can type a message in there. If you wouldn't mind doing that for me now, that'd be great. If you are on a laptop or a smartphone, it's going to look like this one here, a little bit different, and you're seeing the question bubble probably on the right hand side of your screen. Hit that. This is going to widen this out a little bit there, allowing you to type in. So just test it out now for me. Just type hello, type where you're from, anything like that really, and then we can really look to get started. Just a quick disclaimer: spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Past performance is not a reliable indicator of future results. I'm pretty sure we all know all of that, but we have to go through it. So without any further ado, let's get on with it, and let's start having a look at what the opportunities are setting up as we speak. So it's not going to be death by PowerPoint. We're going to go straight into the slides, and we're going to have a look at the scans right now. Hi there, Peter. Hello, Nigel Kipling. Ken Lloyd. Good. So what are we going to do today? We're going to focus on FX indices and commodities. Now, I want to keep this nice and brief today. I don't want to be with us for much longer than sort of 20 minutes or so. And the reason for that is because I definitely get guilty of just waffling on and on and on and on and on. And it makes it very difficult for everyone to follow or that useful a video. So let's talk about what's happening here. FX indices and commodities. We're going to bring our scan up, first of all, for the D1 sniper strategy. I'm going to look at opportunities setting up for today. That's a 1 bar look back. So that's today's bar, today's candlestick. Hit search, and that will present me with this list. So pound Aussie, pound New Zealand, the Hang Seng, and also gold. These are the 4 markets that, based on current prices, current technical analysis, are setting up as a new opportunity for tonight. So this is our hot list, if you like, for this evening that our members are looking at using this system. Now, those of you that are not so sure what on earth I'm looking at here, this is our system on the right-hand side, the Trendsignal Plus system. And we use this to identify turning points and trends and so on. Now, if you're not familiar with the strategy here, you can go to our website, trend-signal.com, and you can register for a live webinar that will teach you more about the strategy itself. In this session, I'm going to go a bit quicker, and I'm going to assume a certain level of understanding, and then also dig a little bit deeper into some of these trades. So what I'm going to do is start off by looking at the pound against the Australian dollar, and we're going to have a look at the opportunity there. Let's just zoom in so I can see that more clearly. And what we've got is a new opportunity setting up for today. So this is today's candlestick, this red one here. And what we can see here is one of these big discs over that candlestick. So the red outline suggests a sell trade, a short trade, so that we can look to speculate on falling prices. The technical patterns in place at this stage are suggesting that the market is more likely to fall than it is to rise from this point. So it's suggesting that we have a statistical edge based on a short trade at this stage. Okay. So what are we then doing with that? So speculating on prices falling, we're looking for the market to go down, which means a target, a take profit lower, and it means a stop loss higher. Okay. Now, in terms of the base rules, I'm going to get into that first of all, and then I'm going to talk a little bit extra color about what's actually happening here. So in terms of this as a sell trade, a short trade, why is this setting up as a sell trade? Well, because the pattern looks pretty good, but what is it? Well, the market has changed direction lower. So the price has started to fall. And then what happens is that the algorithm then has a look to see what the situation is at that point. I can see that the daily trend direction is down now. It's a little bit choppy, but it is down. It's orange. If it was blue, it would be up. up, it's orange means down. We can also see the market is overbought. So the momentum of this market is above 75 and it's turning from green to red, suggesting the market is overbought. The sellers, however, starting to come back into the market. And because it's overbought, there's an awful lot of sellers in this market, in this price at this point. And because there's a lot of them, they could drive prices down quite convincingly. So that's a positive as well. In addition, the fact that it's turned from green to red is a real positive. And then finally, what we're also looking at here, the CP chart pattern, candlestick pattern, is basically telling us that we're looking for a market which has got a descending chart pattern. So effectively, the market has got a high, and then we've got a lower high from there. So effectively, the market is starting to look to ratchet down. What I can also see is that the trend of this market is up. So effectively, it's this sort of situation. So we're here. Okay, so the market has been showing strong highs, okay, moving to new highs and so on, but it's starting to put a picture in the other way. So in order for the market to then start to go this way, it's got to start to get lower highs. So a descending chart pattern starting to take place. You've got a high, you've got a lower high, and then the market is starting to ratchet back down again. The trends are starting to break down, etc., etc. That's where we are at this stage. Gordon, I know Stuart's got a workshop at 1:30. It'd be better to go into that workshop, and then he'll be able to go through all of those questions that you have and guide you through that. Is that okay? Let's go through and have a look from here. At least I think it's at 1:30. Let me just go through. So there's the opportunity. Let's think about it from a stop and target perspective. So with this system, our members get access to this tool, which will help with stop losses and targets from a new user perspective. So actually, as you understand more about the markets, you can start to build a deeper understanding of things. But what we basically got here is the starter targets, which is what we'd recommend for new traders. You can then customize this as you become more experienced, you understand. But let's stick with the starter targets for now. We're going to look at our aggressive stop loss. So it's tighter stop loss, which is at this intersection here. So where that line changes color. And if I click on calculate trade details, you can put your account size in, you can put your risk in there as well, so 2% of your account risk, etc., etc. Calculate trade details, and that will present you with an output. So effectively, based on this particular type of setup, and based on this particular market, by analyzing thousands of different trades, the most likely scenario is this. So you've got a stop loss at 179.36, which is of course going to be higher than the current entry price, and a take profit in there at 177.72. Now, it's a slightly smaller target than it is the stop loss, but I don't mind that, to be honest with you, particularly if that's a more likely scenario. And don't forget, this is the starter target. This is a starting point for new traders to help build confidence, from which you can then look for bigger targets as you start to understand more and develop your skills further. That also then gives you the stable point or trade size. Okay, so effectively for this opportunity, a lot of our new members will be looking at these and putting them into their trading platform and progressing from there. So a target down to 177.73, broadly speaking. All right, so that's pretty straightforward. What I want to do is delve a little bit deeper than that with this particular chart, because I want to show you just a little bit about what else is happening there. Now, if you're brand new to trading, what I've gone through so far is great, and and for you and so on. If you're a little bit more experienced, you might want to know a little bit more about the framework, what's happening at this stage. Well, why don't we just have a look at that? One of the things that we can do when we look at the charts, we do it with the same charts, is we can start to build a little picture. So I was saying to you earlier about the markets doing this, and then it's starting to break down. You can actually see that really easily on the chart here. You're seeing this and this and the breaking lower. So it's had a high, a lower high, a lower high. Do you see what I mean? So you then got a low, a lower low, and then maybe arguably are we going to get another lower low? So you're starting to see the pattern of this market starting to break lower. What you're also seeing on this chart, which just adds a little bit of confidence, again, not something that you have to look at as a new Trendsignal member, but it's kind of helpful, is you can look at where the market has been. So one of the things that we should do is have a look at history to see what the reactions have been off those things. So whenever the market has a change in direction, one of these numbers gets plotted on the chart, and then a dotted line from that number comes to the right. Now this is a resistance level. So the resistance level, the key point from which we fell here, was at 180.103. So that's fine. That was the key point from which we fell. The market then had a little rally high. It tried to test those highs, but couldn't make it, couldn't go past that 180.103. In fact, it only had a little sniff above that level before the market then started to knock it back down again. So that was quite interesting. So that was a good target zone. Of course, the targets are taken care of by the stops and sorry, by the TradeMate tool. But again, if you wanted something more accurate, you can look back to previous resistance levels and so on if you want to get a little bit more involved in the analysis there. But then as the market then broke, it failed off that resistance level. It then broke down and then had another move to new lows, which was kind of interesting. The market then rallied kind of against the short-term trends at this point until here. What the market has then done, you see the spike there. The market's gone back to this resistance level, this 180.15. So the market's got to that level, it's had a little sniff up to that level, and it's found it's been whacked back down again. The way I like to look at this when you're looking at resistance is that it's a bit like that game Whack-A-Mole in the arcades. You get those 3 or 4, 5 or 6 holes or whatever it is on this arcade game, and the little moles or whatever they are stick their heads up, and your job is to pick up a mallet and smack those heads back down again. And that's really what you want to see. You want to see a reaction to price popping its head up and then the sellers smacking that price back down again. Okay, price shouldn't be up there. The sellers want to keep short selling into it up at that level, at that 180 double O's level. It's hitting that level time and a couple of times, doesn't like it up there, and that's led to a significant reaction. So off that level, it's found sellers, buyers, that there aren't enough buyers left up these levels. We're starting to see prices break lower. That then gives us a turning point off a major level of resistance. So that resistance level is not built into the sniper disc, but it gives us extra color on an opportunity to help with a little bit of that framework. Okay, so does that make sense, everybody? Do you get what I'm saying? So the key price, whatever happens is, whenever the market has a change in direction, like here, hits that high, the 180.01, that's the dotted level there. It's the key price from which the market has fallen, okay? And it led to a reasonable fall off there from about 500 points. And the market has returned to that level. It's had a little look at that dotted line, doesn't like it up there, found loads of sellers. Sellers drove price down. And in addition, the technical setup was pretty good too. You've got an overbought market that's starting to, where the sellers are starting to take control. You've got a descending chart pattern, and you've got the daily trend breaking lower too. All of these things are built on top of that resistance area. Now, again, technical analysis, all it really is about building a picture, okay? And that's, for me, I like this as a trading opportunity, because what you're doing is you're seeing a failing trend, a market that was going up healthily, and all of a sudden, really, it's not. Now, whether this goes and falls 1,000 points, I'm not really interested in that. Realistically, we can take this by looking at the target that we had on TradeMate, which was 170. I can't remember what it was now. It's about 50 points target anyway. Or we could look to this recent level of resistance. Got another dotted line here, and also where the market found a little bit of support here, here, and here. That's really where the market is starting to sniff towards. That will be a good punchy target to there. That's going to be about a 250 point objective, something like that. So what would my ultimate goal be? Be down to that level, and I would probably expect a reaction higher off that. So that would be my sort of second target, or more discretionary target. Okay. You still with me, everybody? I hope so. Let me know in the questions box. Tell me I'm not talking to myself. That'd be good. Okay, so that's pound Aussie. Of course, I could have just said, well, you sell it at the sniper, and that's all we need to know. But I think sometimes having a little bit of that extra depth can really help us. Pound New Zealand. This is a really interesting one. There are a number of currency pairs that are just stuck in really tight, disgusting ranges right now. And we're kind of seeing this, on a few pairs. And, this is a really interesting level on pound against New Zealand dollar. So again, we're breaking lower. And what's happening here is similar, actually, but probably an extra wave lower. So you're already seeing the market break from here, there, and having another breakdown now from pretty much a lower base. It's almost like it's one wave lower than the pound Aussie. But you're seeing a market now where the chart pattern continues to be weak. The weekly trend is now weaker. The daily trend is orange, and you're seeing the market. It's relatively oversold, but the momentum is starting to break down again, and that's not a bad thing in a downtrending market. So what you're looking at here is, okay, so do I want to sell it from here? What's in the way? What is my problem with this? Well, a couple of things really. One, you could look at to the recent level of support and think, well, that's quite tight to that area there. So you might want to think about what your target zone might be. But what is interesting about this is that the market has found resistance here, 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 or support, I should say, here. It's struggling to break through those levels. We're right on that level now. What I would say is this, that if we can see this price close convincingly down here, I'm going to be quite interested in this trade. Even lower would be good, to be honest with you. That would be even more convincing to break through this previous level of support. If the market gives a sell trade when it's bounced quite a lot off, so if we end up with a sell trade with some more wicks up here like this, I'm not going to be very interested in, because all I'm seeing is a price that's moving higher and I'm selling into a rising price. So actually the candlestick formation for me is going to be quite important on this trade. Pound Aussie, I'm pretty happy with it. Pound New Zealand, I'm less so, because the market has found reaction. This 92.30 area, it's found reactions 5 times and it's struggled to break lower. Kind of perhaps overextended there, but you could say 6 times here. That doesn't make this at this point that great. Okay, so what are we going to look for? We're not going to take this opportunity now. I want to see us closing down at these levels, which is going to add extra confidence. Because if we close down at these levels, it means the buyers aren't whipping the price back up again. It means the sellers have maintained control of this market. On these other candlesticks, the buyers started to take control back. I don't want to see that happening again. I want to see something different happening that we've seen 4 or 5 or 6 times already. Okay, so that'll be really interesting to see where we are there with pound against the New Zealand dollar. But, all other things being equal, I like this as an opportunity. Do I need this level of understanding or depth of knowledge to trade these? No, not really. Basically, what we're saying here is, in any case, the fact that we've got a sniper is any pattern that looks like this on pound New Zealand overall is a pretty decent picture. And if you looked at every opportunity that looked like this, technically, you'd be in a decent profit. That's really what the sniper disc says. But the extra color can give you a little bit of a little bit more freedom with it, a little bit more choice over it. And I suppose it's a little bit like in golf terms, really, on the first hole on the tee on a par 4, you probably should hit driver every time, right? But of course, there are some holes where there's water down the left, there's out of bounds down the right, and you might think, you know what, I could hit driver, but actually it's a little bit riskier. So what I might want to do is just play a little bit safer this time. And that's okay, because actually, as traders, there are ways in which we can try and keep on the right side of risk. We can look to, take double bogey out of the card, if you like. If you understand golf, hopefully that made sense. If you don't understand golf, well, I don't know. I don't know what to say. Let's move on. So you can look at TradeMate in terms of a longer term target. By the way, really, I'd be looking down to these sorts of levels. So you've got the short term target from TradeMate, which is going to be about 40-50 points. If you're looking for this, the longer term target, I'd be looking for a retest to these sorts of levels around that 188.80. But don't be surprised if it doesn't make there in one go, and you will need to give the trade a bit more width in order to get down there. Is that not oversold though? Yes, it is. But I don't particularly mind it being oversold. Was this not overbought when we had a buy trade here? Yes, it was, but it didn't stop it rallying 250 points from that entry point there, Nigel. So, the short-term momentum is all that we're really interested in, is a little burst of speed for 2 to 4, 5, 6 days. So actually, whether you're overbought or oversold I think is less relevant on its own. It's all about the context of what else is going on. So do I want a shorter market that is in an uptrend like here just because it's overbought, No, not really. That's not enough. Would I prefer to buy a market that's uptrend and it's overbought? Yes, I would prefer that because I'm looking at the overall market direction. I'm looking at a number of factors. On its own, overbought or oversold, in my opinion, is not enough. So I think you got to build context layers to it really. Hang Seng, really interesting one, and actually a similar sort of thing. I actually like this as an opportunity, Nigel, and you're looking at a market that's overbought, but what you're also looking at a market that's overbought where the daily trend's rotating higher. You're seeing a higher low. You're seeing the low. The market's starting to ratchet back the other way. This is kind of like the opposite of what we saw on pound Aussie. So the market's been doing this, and all of a sudden it's starting to do that. In order for it to do this, at some point, it's got to break away from or change direction from a downtrend. So at some stage, the early warning signs of a bigger change in direction are quite simply that the market's going to start to pick up higher highs and higher lows. Okay, so despite the market being in an overall downtrend, fine, but how do we then see whether that trend is starting to move back the other way? Okay, and it's going to be based on certain lagging indicators, and it's going to be based on certain chart patterns and so on. And that's what we're seeing here. So yes, the market is overbought, but you know what? This could be the early stages of quite a big trend direction change. So nice strong market, and of course we're talking about in China about moving out of the lockdowns that are there. I don't know if everybody knew that that China was in quite heavy lockdowns actually, but there's sort of a few talks about that potentially being lifted. So the Hang Seng, the Hong Kong stock market has risen quite aggressively as a consequence. So quite an interesting move there. Okay, so that's interesting. I kind of like the look at it. If you're thinking about a longer term objective for a market like this, then really we're going to have to be thinking about, this may not happen in one move, and I'm certainly not expecting, this market to go straight up to this sort of a level. But if you look at previous support, previous resistance, you're looking at around that sort of level there. That's where it's clearly a bit of a price point really for this market. So I'd expect the market to hit a bit of chop as it gets to around that level if this proves to be a positive move. Again, whether it does this in one go, I don't really know because that's quite a reasonable rise. But if it does get up there, it's unlikely to slice straight through it. There's likely to be some sort of conflict between buyers and sellers up at that level, in which case it makes a good area for a target. But again, like I said, don't be afraid to manage that trade. Use some trailing stops if you want to, and so on, or just go off the vanilla TradeMate tool if you're looking for a stop and a target. So if I look at TradeMates here, I can apply it to that one, and you're looking at a take profit up to 18527. So that's about a 300-point move. So that's the take profit. That's the rules-based zero sort of analysis sort of target that is based on rules. It's based on not really analyzing anything other than previous behavior. So you can look at this and say, well, typically a trade like this would go this far. Okay, that's basically what that target says. And that's a tool you can have on your smartphone or tablet or whatever. There is always the ability to outperform this by looking at the context of the individual opportunity. But again, that's down to your desire to want to analyze to that degree. So some of our traders would go straight off these targets here, and that's fine, and that's it. Other traders might look for potentially better returns, or they might think, actually, do you know what, I really like that. Let's have a look at something that's based on the context of this individual trade and what's happening right now. Is it possible that I could get a little bit more on it? Then those are the things you want to start to look at. Okay, Brian, what's meant by overbought and how do you know? An overbought is, well, let's think of a room, think of this. Okay, so let's say you've got 100 people in a room and that represents the entire marketplace of, I don't know, oil. Okay, and you said to those 100 people, right, stick your hand up if you're long oil. And everybody puts their hands up. What does that mean for the price of oil going forward, do you think? Does it give us any clue about what could happen to the price of oil going forward if everybody in the room is long oil? Let me know in the questions box. Do you think it's more likely to go up? Do you think it's more likely to go down? No idea. Is it more likely to go sideways? What do you think? You can let me know in that questions box. And while you're putting some answers in, I'm just going to move on to the last one in the list, which is gold. Which again, I quite like. Gold's rotating quite nicely, really, at the moment. So you've got some interesting moves. I would say not the most convincing buy pattern at this point, and the reason for that is because you're seeing the market sort of kink a little bit here. So to buy, so I'm not going to be expecting a massive rise, but I certainly think up to this sort of 1777 level is looking quite interesting. There is again the bite-sized target you can get using the TradeMate tool, which is fine and perfectly reasonable. But in terms of something more than that, I'd be a bit cagey really at this stage, simply because I haven't seen that real desire, that real strength over the last sort of 5 or 6 bars. Okay, so what are we getting? So there's a few people, a lot of people actually, the majority of you are probably saying you expect the market to go higher, and Nigel saying it's likely to go lower. I agree with Nigel, it's more likely to go lower. Why is that? It's because if everybody in the room is long oil, then who's left to buy it? Nobody. Everybody already owns it, so they could buy some more potentially. But actually, what you are left with is a room full of potential sellers. Everybody owns it, and therefore you've got a lot of people. More people probably are inclined to sell that than they are in order to buy some more. So therefore, you've got a marketplace which is full of sellers. And when the market is overbought, it's suggesting that far too many people in the marketplace are probably long by now. In which case, are there many buyers left at this point? In which case, if the answer is probably no, then you're left with an abundance of sellers. What are sellers going to do? They have to hit the sell button, and that's going to drive prices down in order to close their position. And if there are lots of them, then of course they can then drive prices down quite convincingly. So that on in itself is not an indication to trade, but it should be seen as part of the picture. Okay, so the fact that this was a sell trade was because the market is overbought, right? But also you're seeing that the monthly trend was also down. So you're building a picture based on several factors to determine whether this is a trade worth taking. Okay. Does that make sense, everybody? So Kipling, Brian, Andre, just think about the marketplace as a whole, okay? Remember, it's a very crude analogy of 100 people. Of course, there's significantly more participants than this. But like I said, the thing with it is a lot of people get really sort of over the top, probably just looking at one indicator, and you can get really blinded or blindsided by one indicator, to be honest with you. You've got to try and have a blend of things without it being overly complicated. That's why we look for several factors with Trendsignal. It's simple, actually, in many ways. The more stuff you look at, the more complicated it is. The least number of things you look at, perhaps the more holes the strategy might have in it. So it's about having that sort of that blend in between, really. Okay, so that's an interesting sort of opportunity. I like it up to those sorts of levels. Stop loss, my stop loss would be below this bar here. So you're looking at stop loss down to that sort of 1739.5 level. Okay, I'm going to call it an end, actually. I mean, someone's mentioned New Zealand, Swiss. I think that's more on the D1 accelerator market. There is a couple of bits on the D1 accelerator. Let's quickly do that because somebody did ask to look at New Zealand, Swiss. Look at opportunities for today. Oh, it's gone, which means it's on the edges of an opportunity that I would say search. Let's just make sure. Bear with me. Where am I going? What am I doing? D1 accelerator. And we have New Zealand, Swiss. Yeah, that wasn't particularly good, but it's interesting. It's worth having a look at this as a buy trade. The thing is about this market, a couple of really nice moves on an overall market that is trending higher at this point. So just keep an eye on that one as a buy, because if this indicator here, this line starts to turn from red to green, you're going to get quite an interesting buying opportunity, Mazen, because what you'll have with this line changes color to green, you can have an uptrend on the daily, you can have a higher low, you're getting higher highs, Okay, so that high is higher than that high, and so on. That low is higher than that low. You're seeing a market that the chart patterns, as I say, were positive. The dailies, the weekly chart is positive. So we're starting to again see that market ratcheting higher. So definitely keep an eye out for that. I'd say that's pretty much it. We've talked about half an hour, 4 opportunities at this point setting up for tonight. So do keep your pencils sharpened, and hopefully that gives you a bit of an overview about what sort of thing we are looking at here. Let me just go back to that. Bear with me. That Hang Seng chart. So look, there we are. Hopefully that's been useful. Let me know, guys. Give me some feedback if you've enjoyed today's session. That's great. If there's anything else you want to have a look at, or we do these sessions every week, Tuesday lunchtime, so you can dial in for a future session and we can have a look at more of the same. Again, just remember that if depending on where you're at, it's always difficult to balance, what to cover on these sessions. Some people looking at this session will be brand new, and I'll probably bamboozled you with some of the content. Some of you maybe quite experienced, and it's been right on the sweet spot. I don't really know. What I like to do is really to demonstrate that as a Trendsignal member, what we're looking for here is to do 2 things really. Number 1 is to provide that initial rules-based approach to trading, and then number 2, the platform from which you can then look to develop and actually understand a bit more about the markets and look to fine-tune what you do for greater potential gain. All right, so thanks very much everybody. Have a wonderful rest of the week's trading and catch you soon. Bye bye for now.